The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, since there's no volatility in the market today, I thought we'd just play some recorded music. Okay, let's take a look at the DAX. As you can see here, it had been heading down, and it's still going down. It hit a pretty good bottom this morning. And if we take a look here at the FTSE, you'll notice that we did gap down, but we're completing an ABCD in here. We should have a little bit of a bounce in here, folks, because I would think that we're a tad oversold, as they say in the trade. But one of our listeners today dropped me an email and asked me, they happen to subscribe to the 24/7 newsletter, and they said, how did I know the market was going to go down? I laughed so hard for 10 minutes, I couldn't believe it. I didn't know it was going to go down. I was looking at certain signs that I talk about here every morning, and also when I put it in the newsletter every week. I mean, I'll give them to you in order of importance. First of all, we were seeing these major three-drive patterns everywhere. Second, you know, the banking index, which is money, was rolling over big time. I mean, that was a big thing, and led by, you know, Goldman Sachs. You know, number three, the IWM was in a downtrend since September the 1st. Number four, the divergence between advanced declines was incredible. Number five, the new highs to new lows was just absolutely terrible. You know, it really was. And number six is the New York Stock Exchange Index could not make a new high. And of course, the NASDAQ couldn't make a new high on this last run too, which was rather important too. Also, the social media stocks, Facebook, Twitter, Google, all of those were acting terrible. Also, the Asian stock market, the emerging market that we posted, the Hong Kong market that we posted, the Japanese market that we posted, the DAX and the FTSE, they were all turning down, folks. You know, and not only that, but the interstate market was in a free fall, i.e. lower bonds. You know, and not only that, but the volume sucked on the way up. I mean, there was not a lot of volume. There just wasn't participation that we tried to bring to your attention. And then the volatility index, you know, was just begging to be bought. You know, it couldn't get below 12 or 11 during this whole run up. I mean, something was that. Anyway, who knows? Yeah, I got a lot of frogs, Ruby. I got a lot of frogs. You got to remember that that's what we're looking at. Today is the day we have the grain report. Is secondary to what's going on in the markets today. We had a little bit of a chance of the market bottoming last night. In the middle of the night, and trust me when I say middle of the night, that's what I mean. The old cowboy was up last night rocking and rolling with some of these things, and I thought we were going to have some type of a little bottom forming in here. I'll bring it up here just to show you what I was looking at. This was basically a 15-minute chart through the 3 hours of the early morning, and that's we had a pretty good rally, and we went we had a rally back up to the 12, went up to that 1.27 level, spot on at 1288, and we'll see if that's it. Yeah, buy the dips. Yep, buy the dips. All right, let's take a look at some of these things. One of the things that we focused on last week in the newsletter was the fact that we had this market was going down big time, and if we looked at the IWM that we talked about earlier, you can see that we made that butterfly pattern up at the 1.618 expansion. Folks, that was September the 3rd. That was the anniversary date of the high of the stock market in 1929. And you can see that objective. We made that objective yesterday at 155, 154.94. So there should be some support coming in here, but with these wide-ranging bars to the downside, it's going to be a little difficult. to see if it's going to hold some of these things. If you take a look at what happened here in the let's just get this up. You'll see the E-mini S&P. If we just compare, again, you can see the 3 drive to a top pattern up there at 29.40. We stayed there for almost 2 weeks, not going above it. If you look at the break that we had in February, you see where it went from 28.80 all the way down to 25.30, and we could easily get another break down into that area. That would be a similar type break. I've marked them in here so that you could see it. We could easily hit 26.25. Folks, if we can make this much in one day, this is actually the 3rd worst day the market has ever had, I recall. I think I heard that on Bloomberg this morning. I remember on the election night, the market was down 800 points, and I believe that matched one of those from way back in 2008. But again, I would have to double check. But we'll see what happens as we go through and look at some of these others. But remember, I also, here's something very important, folks, that I want to post for you. There are trading limits at the Chicago Mercantile Exchange for the E-mini S&P and the SPX. Let me post these for you. You ought to keep these on hand, because these are the market-wide circuit breakers, and this is how they figure them out. It tells you where you are, and it gives you what the circuit breakers are. It tells you the previous close, and then it gives you the circuit breaker if the market's down 7%, 13%, and 30%. You'll notice that they halt, and then they'll move on to C. They don't go. They'll go limit down, and then they stop for whatever that is, 15, 20 minutes, and then you're ready to go. So we'll see if that works. Anyway, I hope that's good information for you. That comes from one of our good friends over in across the pond over in Australia. Now, here is somebody we have to pay attention to, folks. Our good friend Norman Winsky did a lot of searching, and he saw this picture of Mr. Alvis Roebuck. And as you can see, he is definitely a Caucasian. So I was wrong about that. Mr. Roebuck was a Caucasian, and he lived to be 84 years old, and that was about the end of that story. Okay, let's move on to a couple of these charts that we got to cover, because we got a whole bunch of them to take a look at. Let's move on here to just the one I want to look at here, which is, I think, very important. Here is the NASDAQ. Now, I didn't update this because we went down. We almost got to that target this morning. You're right, Mark. It is a good one. That's about as good as you could get back in the 30s, I understand. But you'll notice that the break that we had in March to April is we're almost at that level right now. The problem is when you come down that hard, you actually scare some people. And, and it is scary because you see the market down 2-3%, something like that. But, it was really telegraphing that it wanted to go. Look at remember when we were looking at the what do they call that darn thing? The Hang Seng Index. When we were watching the Hang Seng Index, the darn thing, it would just stay there at that 3 drive to a bottom pattern, and we suggested that if it went below there, look out. And what did it do? It dropped 1,050 points yesterday. So let's see what happens to the next one. Let's take a little break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to put the chart of Apple up because one of our listeners was able to take advantage of it the last few days. In the last 8 days, it's worked 7 out of the 8 days. Yesterday was a huge move in Apple, risking $1, and it picked up more than $12 a share, risking $1, which is a pretty good return. Now, I had a question about someone asked about the divergence I was seeing in the NASDAQ. If this is the big composite, and as you can see, we had a 3 drive to a top pattern. That was followed by a Gartley pattern. They both came in at the 1.618 expansions. That also completed the larger ABCD pattern between February and April. So that's pretty, you can see the gap down yesterday and the fact the market was down over 300 points. At one time, when you considered the overnight market, it was pretty close to 400 points. And we should get, there's a possibility that we get a bounce today, but there's no guarantees, because when you see wide-ranging bars like this, that's a game changer, folks. That's a change in economic thought. People are now thinking a little differently than they were before, and I think that's something that we had to pay attention to. Now, if we take a look here at this banking index, this was another one that is heading down. It looks like we're going to break out all the lows probably this morning sometime. We're going to take out all the lows from March, May, June, July, well, we've already taken out the September lows. There should be some support around 101, down about another 3%. Whether that's going to occur or not, you know, we have to wait and see. As I mentioned earlier, these social media stocks were certainly headed down. You'll notice what we're looking at now in the Facebook. We've completed the ABCD pattern here. on the 135 pattern down at this 52 level. The larger one comes in at 144, and then there's a bigger one at 135. That's the large ABCD from the high that we made in July. The 382 rally back, and then the other one down. But these are some of the ones that are telling us that you might get to some type of a spot to do it. Now, the cooler heads should prevail, but when you have something like this happen, folks, you really don't know. This is the same type of thing that happened well, I don't want to go through that. I don't want to scare anybody. Let's go back here and take a look at a couple others of these markets. Do you remember we were looking at gold that looked pretty interesting, that had a chance to run? Yesterday was our telltale sign that something big was going to happen to gold. When you have almost every Dow stock was down, 80% or more of the S&P stocks were down, and look at the mining stocks, look at the XAU. Those stocks actually were up on the day. That was telling you that there was something up in Denmark, and that's why you were seeing this big move. So this is we finally got some game going now in the gold. I don't know if it's going to go straight up from here or not, but it should. Oh, I forgot to put Twitter in there because that's another one that's of course very popular, and we'll take a look at it and we'll see. It's got a profit objective down around 20. That's another 30% from where we are right here. Well, how can I apologize for putting the charts in, because that's all I know. I have got a lot of charts today because I think it helps describe what we're looking at, because no one knows for sure what's going to happen. When we come back from the big break at the half hour, I'm going to talk a little bit about the grain markets, because they have a big report today. We've got some possible buy signals in them. But the other thing that's interesting is that if you're scared of some of these things with stocks and these indices, look at the futures market, folks. They behave beautifully. The metals markets behaved beautifully. I mean, all of the futures and all the futures markets were doing good. It was only the stock indices that were going skoshi buckatati. So be careful when you get in there. Boy, for heaven's sakes, you have to put a stop in these kind of markets, because if they hit a vacuum, and you saw what a vacuum looks like, you're looking at something real serious. You remember yesterday when the market opened sharply lower and we said there's a potential to hold at 28.50, but if it went below 28.50, look out below. Well, we went to 28.50. We went down to 28.22. We rallied up one more time to 28.49 and a half, and then dropped 100 points. I mean, it's just really you gotta protect yourself, folks. If you don't put a stop in here, you're telling Mr. Market that I actually know more than you do, and you'll never know that. Men make mistakes all the time. Markets are never wrong. Just kind of keep in mind that that's something that you have to realize. Another market that we were talking about yesterday, which was the natural gas market in the midst of this hurricane. It was making a beautiful ABCD pattern exactly at the 78% level. We broke over 14 points, actually 16 points. Today we got down to 319, so that's one that probably has made some type of a top in here, and we'll see if it's going to hold that level or not. We don't know, but we certainly want to keep a close eye on it, that's for sure. Here's a picture of what that Hang Seng Index, what we were talking about just a little earlier. There's that 3-drive pattern, and we gapped below that, folks. Last night, and we went all the way down to 25,101, I believe, and we closed just a little bit above that. So that gap down with that huge gap, and these markets have been going down. Look at these lower tops, lower bottoms. I mean, that's what's been going on. Do you remember when we talked about the emerging markets, how negative it looked? I mean, it had all kinds of signs saying this is not good. It just doesn't look good. And remember, one of the big markets, of course, is the Japanese market. And if you take a look at this, I mean, this was mother, God, and country. Look at the butterfly pattern up there. I mean, you have a perfect A, B, C, D pattern starting in late February, going all the way up into early September, and bada bing, bada boom, and then they're surprised. And you can imagine where we're trading now. We were down more than 1,000 points last night. That was not counting the 1,000 points. Boy, this is right. Anything can happen, and you don't need to know what is going to happen next in order to make money. There's a random distribution between wins and losses on any set of variables that define your edge. An edge is nothing more than an indicator of a higher probability of one thing happening over and over again, and every moment in the market is unique. God bless you, Mark Douglas, wherever you are. He was my rock. Anyway, let's take a look here at a couple others that we want to pay attention to. One, of course, is this VIX index. You talk about a market that's not even scared, folks. Just take a look at this. This is the weekly VIX index going to 2009. Look at the move in 2009 when we were down 770 points. That's when Mr. Paulson was doing his number on Lehman Brothers. And look at us today. We get up to what, 23? This is nothing. Look what happened in January, the January-February bounce. That was one day, was that volatility index bump. But look how we stayed above $10, $11 for so long. That was telling you that this is just starting, folks. You can see what the target is here. We're looking for a double top, is what I think we're going to see. We're going to see some wild stuff. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look here at the Christmas wheat, December wheat. We've got a report today, agricultural report, mainly soybeans and corn, and wheat will be included, and that comes out around 10 o'clock Chicago time. Take a look at the wheat. It's got a nice pattern down there that might look like it has some value. Now the grains are trading very, very normally. They're not involved, and believe me, this has the break that we're seeing in the market, folks, has nothing to do with the trade to tariffs that's going on. It has nothing to do, with the Federal Reserve. In fact, I cannot believe, the president. Well, how can you not believe it? Anyway, he has his opinion, and let him have him. That's okay. If he thinks that's the way it is, he's entitled to that. But they didn't do anything, folks. Interest rates have been going down. Notes and bonds have been going down for a year and a half. The Federal Reserve has been tagging along with what the market has been doing. So that's the big difference, So there's really nothing there that, makes any difference at all. So let's sort of kind of keep an eye on that. Now, before I get into the other grains, I need to focus here just a little bit about the Dow Jones Industrial Average here. Yeah, the precious metals are looking good, Terry. The copper's not precious, so it's not looking that good. And actually, silver's not looking that good either. I don't know. I didn't check how. I got to show you that one, too. You notice we made a double top in the Dow. We focused that. But you'll notice the drop in January to February. We could easily get a drop like that. We went from 26,700. We dropped 3,000 points. 3,000 points here would take you down quite a bit because we've already dropped. How many points did we drop already? 1,000. We dropped. We dropped 1,200 right now. So that's a possibility. But let me bring this chart up because I think it's very important here in the silver. So just give me 1 second to get it up here, and then we will. I know it'll update because I was up all night. Which I enjoyed being up all night because it was fun. You don't get to those kind of markets very often. Let's just get this up here so we can see it. And, oh my gosh, this really shows it. This is not looking good for silver. I'll tell you, I'll be really scary here in silver. What you're going to see here, boys and girls, is the fact that you've had this tremendous move in gold, but look, gold is in the blue line. See, gold has gone up and touch the high that we made in October, and look at silver. I mean, it can't even make a 61% retracement of the October 5th high. This is that's really lagging the market. You would think that silver would be above 15 bucks an ounce, but in fact it wasn't. Now I don't know if that's a flight to quality or inequality or whatever you want to call it, but that's something that I think is, relatively important to pay attention to. Now, we made that 1.27 level again up there at that 2789, 2790. That should be a little bit of resistance up in here, and then we're going to see what the market does from that. But remember, the problem is, folks, the longs are now the ones that are afraid. Remember when it was going up, how the shorts were afraid? Well, the longs are afraid now because if they bought it yesterday hoping for good value, it goes back to that old adage that my old grandpa used to tell me, just got to use a stop, because if you don't, you're looking at goodbye house, goodbye car, goodbye boat, goodbye wife, and back to the old McDonald's fry cook job. So make sure you use a stop, boys and girls. You have to, otherwise you're in trouble. That's neither here nor there. So kind of keep an eye on that as you're going through some of these things that we're looking at here this morning. Last night, folks, we had 20-point swings in the S&P 3 times. So you can imagine this one here has been 35 points from the low that we made. So we are getting some big swings. You know, no longer are we going to be looking at these 10 and 12-point days. I believe those are history, because the wicked wish of the West, known as volatility, is here to stay, and I think it's going to be here for quite some time, but we don't know that for a fact. I'm just assuming it by looking at the charts. Everything that I look at here is based on an assumption of looking at the charts. That's all I'm looking at. Nothing more, nothing less. All right, let's get back to a couple other of these commodities that we want to take a look at. One of our favorites that's been really good to us has been the soybean oil. We had let's just get this pattern up here so the folks can see it. Put this up here. You'll see here that we had the beautiful butterfly pattern down at the exact 1.618. Now the difference between the butterfly and the 3 drive has a lower bottom than 0.1. With the butterfly, it has a higher bottom, and then they expand down to either the 1.618 or the 1.27. We bought it down there at 27.15. The low was 27.12. That was one you call just got lucky, and we took a couple of points out of that. That's too large, and now we're looking to see if it can back off to around 28.25. Now we got down as low as 28.75 last night during the big sell-off. The wheat didn't back off at all last night. The soybeans were really quiet. They were trading quarter cent at a time, just like they always do, and so those are the ones that those are what you're looking at. That chart that I posted on in silver and gold, folks, that's really important. That really is. That is. Oh, I'm sorry. I do say that is. That's the old days of Terre Haute, Indiana, Maria. I've been saying that ever since I was a little shaver, sitting there in my grandma's high chair, and she was feeding me oatmeal, telling me not to trade orange juice. She also said that about cocoa, coffee, and sugar. But lately, I've done coffee and sugar done pretty good. Anyway, let's just move on here to the next one that we want to talk about here. That is the live cattle market. We had a request today, and you'll notice that we were very, very bullish live cattle all during July, August, and September, especially in September. We made that big ABCD up there. We reversed, went long, short, and now it's got a 3 handle. 3 large, as they say from Terre Haute. That has a place where you want to be taking your profits this morning. That's down 7 days. Now, the agriculture commodities will be affected just a little bit by what's going on in all these markets, only because of the margin and the fear that's out there. Because when people see, if they were to open their 401ks this morning, you know, some of these people, they see it drop 5%, they're going to say, I wonder why. And some of these have probably dropped that much because they weren't in the stocks that were good. You see 66% of the stocks in the S&P, they're not in uptrends. It's only been those 25 or 30 stocks that we've been talking about that has done this. The rest of it, it's looks like doggy do, as they say there up in Central Park. So be careful. These markets they're not for the neophytes, that's for sure. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. I posted the chart, the 4-hour chart of the euro. You'll notice that we missed that 3-drive pattern at the exact 786 by about 12 pips. It made the 1.27, and we've had a pretty good rally. We rallied up to 115.99. That took out the October high by 4 pips, and it immediately broke 30 pips from that level, so that's going to be an important spot to watch. If we get above 116 in the euro, that could be pretty bullish. But right, what it looks like now is just nothing more than a rally after making that 3-drive pattern. That's what it looks like from what we're watching here this morning. I'm not sure, but that's just my assumption. Of course, you know what assumption means. It makes a 1 out of you and a 1 out of me. All right, let's take a look here at one other one we want to pay attention to this morning, and that, of course, is the Treasury bonds. We had a little bit of a bounce in here, what we call the DCB. And if we take a look at this, you'll notice here that, we got down to 136.12, I believe. Well, 136.18, I believe, was the low. We rallied up to 138.16. We rallied 2 full handles. But, folks, interest rates are going higher. This thing is so bearish that it's really hard to try to be a buyer of it. There was a place to maybe cover your shorts, but it's due for a tremendous rally. Just look at that's not true, because you can see what happened during April and October. It was basically straight down after it started to break. You see the break in October? That was the beginning of it. It went down for 8 weeks. This one's down for 8 weeks. So the target on the bonds is 125. We're trading at 137. That's 12 handles. That means that it's got a long way to go to the downside, much like we looked at when we were watching Facebook and Twitter and some of these others. So The only thing that I could really urge you to do, and I mean this with great sincerity, even if you don't use stops normally, for God's sake, use them now if you're trading the stock indices. They can easily run into vacuums in there. You'll notice yesterday on the close, it dropped 40 points because there was nothing there on the close. Nothing but sellers. There were no bids in the market. That's what was causing that big drop. And when you run into that, you know, if you're long and it's going down like that, that's not a really warm, cushy feeling, boys and girls. It really isn't. So protect your backside. If you don't, you're in big troubles. We'll see what's happening with these a little bit later, but well, one thing at a time. The ideal situation is that we chop around here all day, maybe even go positive for a little bit. And I would not like to see new lows now in the Dow Jones and the NASDAQ and the S&P from where we were overnight. That means we got more selling coming, another really wide bar to the downside. Eventually, the markets are trading really nicely right now. They're swinging back and forth, 30-point swings, which is really good. But if you're not an active short-term trader and can't understand pattern recognition, you're going to be at a disadvantage, because I can tell you right now the moving averages are moving and they ain't going to be average. They're not going to be your friend this time, because these swings are very, very vicious. You have to look at the expansions of 127, 1618. Watch the ABCD patterns. We had 3 or 4 of those last night in the E-mini S&P, just as easy as can be. But these are not easy markets. And this is the beginning, folks. This is not the end. We've posted that chart of the VIX, and that's just the beginning. We're going to see, I believe we'll see the VIX way above 50 sometime before Christmas, and I don't know where it'll be eventually, but longer term, it's got the history of going back to that 80 level before, and I think we could do it, you know, without too much trouble. So just remember, you've got to protect yourself, because if you don't, you're in big trouble. That's you know, that's basically the bottom line of what we're watching here. Someone's asked a question about the ABCD patterns. Folks, the ABCD patterns work perfectly. In other words, where AB equals CD in price and time about 60% of the time. The other percent of the time, about 30% of the time, the CD leg is going to be an expansion of 1.27 or 1.618. And then the other 10% of the time, your swing from the AB and the CD will just either be a double top or be a 78% retracement of the other. But you see, the problem is you don't know which ones it's going to be, and that's why you have to wait, you know, for the pattern to complete. And then you have to make the decision, am I willing to take the risk here to see if it's going to be correct? If you can say yes to that, then you've got a pretty good chance of you know, having a winning trade, and that's you know, really what you're trying to do here when you're watching some of these things. So sort of pay attention to it. That's the main thing that you want to be watching here. Let's talk about crude oil for a little bit. We mentioned that in the newsletter very, very specifically, because if you'll remember, we were looking at this long-term weekly chart in the crude oil, and the Fibonacci level for the 61% retracement off of the high from 2013 came in at right at that 77 and change level. And you know, right now we've broken more than we've broken $5 a barrel, almost $6 a barrel from that high already, and that tells you that that top is most probably in. So what you want to be watching now is for an ABCD structure to the upside to potentially get short. I am actually stalling on putting any more recommendations for the grains in. I sent the videos out last night to the 24/7 folks on what to look for this morning, but the wheat's already bouncing away from that 509 level, so it's going to have to be a real bearish report, you know, to get it moving. The grains are acting pretty good. This tariff stuff has nothing to do with what's going on in the stock market. They can say whatever they want. The tariff started in you know, mid-May, and here we are in mid-October. So that has nothing to do with what's going on with these things, because we've already made a deal with Mexico and Canada, and China's the one that's on the ropes, folks. The Chinese market was down 4%, and believe me, the number of people in China that are in the stock market, you can count on one hand on on a percentage basis. Believe me, there are very few people. I mean, there's a lot of money over there, and they do some stock speculation, especially in Shanghai. But believe me, the overall population of 1.5 billion, they don't even know what a share of common stock actually happens to be. So whether that's going to be it, we'll have to wait and see. 1 second, please. All righty. Yes, the natural gas is broken really nicely. That was one of the ones that we talked about yesterday. It's down to 317 right now. That is 20 handles from the high, which is $2,000. So whether it's going to continue down or not, I don't know, but it has a tendency to move very, very dramatically when it does. So just sort of keep in mind that's what you're looking at when you're watching some of these things. And let's see what we have. Let me double check the markets this morning. The S&P has got it. This is good now. See, the S&P is back up to that 2788 level. It's a 1-2. This is the third time it tested. If we can pop through here, we got a chance for a little bit of a rally today. So let's see what happens. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'm going to end the show to remind you the fact that we've had a situation going on in the stock market that is very reminiscent of what happened in 2007 and 2008. I'll bring it up here to show you. It really shows you the home construction, the banking index. Remember, the banking index is the money, and we were watching that one very closely. Even the real estate is showing divergence, and we're also seeing it in the momentum of the S&P 500. So pay close attention to that. I put that into the newsletter 2 weeks in a row because it was that important. And I also put the chart of the Dow Jones monthly chart in it 3 weeks in a row because it was so important. And that's the main thing that I want to see what is going on here. I don't think that 27.88 means a whole lot this early in the morning because it's so crazy, but sort of keep an eye on it. That's the main thing. The most startling thing to me, I can see the stock market going down. That was startling, but the fact that silver is lagging so badly to gold is it's very troubling if you're long precious metals, which I am. So what I'll do is I will, use my stop a little more judiciously this morning to make sure that the market, if it does turn down, that I'm protected. I'd put a stop in around 1207 is what I would do in the gold if you're in it, because we did complete an ABCD pattern in the gold at 1214. We couldn't take out the highs of last month, so that's not a good sign. But these markets are very jumpy, and that's the way they act. So you got to pay attention to them and to see how they act during the day. But that's neither here nor there. So we got to watch it. Okay, one other thing. Oh, we got the shows up almost over. So I guess we're going to wind it up here. I don't have any guests for tomorrow. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!